Hello, hello, hello. Welcome to Our Stock Trades. I wanted to create this video update on the packet that we installed in BrainMachine. We still have one more update to go, V3, and that is going to be very extensive. But I'm going to be showing you what's new, and then we're going to be making a tutorial for all of our Our Stock Alerts and Mastering Stock Market Student members. So in this video, we're going to be analyzing some companies and kind of putting in different types of companies in different sectors. So let me explain what I mean. So if you go down to slickcharts.com, you can look up the top 500 companies in the S&P 500, right? And you can essentially, run through these and scan them through our BrainMachine and see which is overvalued, undervalued. If it returns weird numbers, you can then go ahead and take the financial information, slab it onto our intrinsic value calculation, price to projected sales calculation, price to projected BrainMachine calculation, and so forth. And the beautiful part is you could do it for the S&P, the NASDAQ. You could do it for the Russell. There's a little bit more riskier stocks here. You could do it for the small caps. So the reason why you would kind of do something like this is you would want to know if a company is overvalued or undervalued. And if you look at like the PE Shiller ratio along with the Buffett indicator, we're starting to get at pre-pandemic lows before the Federal Reserve injected liquidity in the market. But even till this day, a lot of companies are actually still overvalued. Yes, overvalued. Which is why we were looking at companies that are negative, that are about to turn positive free cash flow, because they've been beat down terribly, right? It's the one to get optimal returns. But hopefully the market goes down more. But the beautiful part is by doing this and running your companies that you like to invest in, you would essentially do more due diligence and essentially try to see how low can it go? Is it at fair value? Is it above fair value? So we're going to go in and we're going to look at some a couple of companies. So we'll start with a couple companies on the S&P 500. So let's go ahead, and there are two different types. Just want to share with you guys. If you go to Al Help, you would need to go to the stock fundamental analysis. There's a lot that we offer, but we're going to keep this video nice and simple. There are three different types of price target calculations. The latter two are more advanced. This is short, this is medium, and this is long term. Okay, so I guess we can look up. I guess not Apple first. Let's go ahead and take a look at Meta. So if we look at the medium term for Meta, which is just Al/A for advanced DCF, then you type in Meta, doesn't matter if it's capitalized or not, then you would do 2026. You would see, and again, this basically gives you the expected revenue, the revenue percentage, the EBITDA, depreciation, total cash, and essentially analyzes the market, the total shares outstanding, the tax rate, and the WACC calculation, which is the discount rate, right? And it does that automatically for you, which is pretty impressive, right? And what it gives you is the equity value per share, essentially the price target per share. And it's saying that Meta, from a medium-term perspective, should be worth around $358.35. Now, if you want to go in and check what is Meta currently trading at, you just type in Al C quote Meta. You want to see the quote, right? You type in Meta, and then you would see Meta is currently trading at $170, right? And it gives you the day low, the high, the year low, the year high, which is right around the price target. But let's say you want to go more further out for Meta. Well, you go Al-advanced leveraged AL DCF, right? DCF. And then you can type in Meta, then 2026. And it does its calculation. And then if you go down here, it's saying that the value for Meta will be around $569.66. So if I were to hold this company, it's currently trading at $170, $169, and if they win their metaverse bet, I'm sorry, that's incorrect. Let's I'm trying to do math on the Discord here. You type in here, you can, but it's like a special command. That's a nice 3x of your money, which is great where we're at, and a lot of stocks are undervalued, right? But, let's go in and let's do Apple. And from now on, I'm just going to be doing the advanced leveraged. If you guys want to do the other ones, definitely consider, if you haven't done so, joining our community. There'll be a link down below. And here's a little quick screenshot. You can pause the video about what we offer. But going back to the video here, let's go ahead and do Palantir, right? Palantir 2026. And currently, we know that Palantir's free cash flow positive. However, there are some negatives in its balance sheet, which is why it's giving you negative numbers. But you could take the opposite of that. So the equity value per share for Palantir, essentially the price target, is $32. That's what we expect from these calculations. And if you look at it where it's at now, it's about 3x your money, right? It's around $10. It used to be at $7, right? So, and it gives you obviously the expected revenue for that 2026 year, the revenue percentage and all these different types of components. So if you want to go in and now take this, you can take the financial information, slab it onto our intrinsic value calculation, our price to projected sales calculation to give you price targets like that, and then also the BrainMachine generated revenue calculation. And when you essentially do that, you can imagine like this is Palantir, and you're trying to hit it with different equations. You want to hit it with multiple style of equations, looking at it from different directions, okay? So maybe this is the intrinsic value calculation, and you get to see the value on this side. And then you can hit it up with the price to sales calculation, and you get to see the value on this side. But the problem is you don't know what's on this side. You don't know what's behind me here. So that's why you do these other calculations, and then once you do them, you'll find the value. And when you look at that, you see, more detail, right? So you can think of these calculations as just trying to get a visual image and projection on the company in the future and discount future cash flows to today's present value. So, and for people that don't know what the hell I just said, we'll be teaching that in the Mastering Stock Market course. I plan this will be lifetime access for the beta members, so definitely take advantage of this as it's heavily discounted. And the beautiful part about this is this is something I'm building this as, you're going to be using this for the rest of your lives. Right? This is what and a lot of members have committed to that. So definitely, if you're not committed, this definitely is not. I would just invest in index funds. This is very highly intensive. Okay, so going back to more calculations, let's go ahead and let's do Apple, AAPL. And let's do 2026. It's crazy, man. They're going to be making this much money. Wow. If you look at the equity value per share, they're at $124. So definitely, it's currently trading at $141. So I wouldn't be going into Apple. I think it's overvalued, right? But again, it is a safe haven. But if the recession does hit, that definitely we could see it even go lower. We can just, out of kicks, we could just do the advanced DCF to see the price. Yeah, 119, right? So even lower, right? And that's not leveraged. So let's go in and let's do Microsoft. Yeah, if you type in Microsoft 2026, you could do 2025, 2024, 2023, 2022, right? And that'll change up the revenues for you so you can use them to your BrainMachine expected calculations, right? To see where it's at. But you could see the revenue percentage, 16, almost 17%, $368 million in revenue, by 2026. And the equity value per share is $246. But right now it's trading at $268. So definitely still overvalued. But what's interesting is actually if you go to website here, and if you go to the United States Congress Fund, it's kind of quite interesting. We do see a lot more Microsoft being bought out by Congress, and you could just hover over that and you can see. So that's definitely interesting. I want to know why. Maybe they know that there's a expected license that they're going to be getting. Insider trading is legal if you work for in Congress. Sucks, but yeah. But we can divvy kind of a hypothesis based on what they buy. And but let's just switch gears really quickly. Let's say, for example, you want to look at what sector you want, what sector you want to get into. You see an emerging sector that's starting to pop off. Like, for example, if you look up sector rotations 120 days ago, you can see energy started to kick off. And what you could do back on January, you could have looked at all the energy stocks, the ETF, which is, we have it here, XLE. And you see how we split up the S&P 500 based on just what's inside of it. You can look up the ETFs for these, and you can look up all the energy stocks under XLE, and then do your intrinsic value calculation to see what's undervalued. Like, for example, Oxy, which is what Warren Buffett bought. You can go in here and type in Oxy 2026, and back a couple months ago, you could have seen that the price target is $67. But if you go in and type in Oxy stock, you can see that it's literally near that and went above it, right, to $74. You can't see, it's at $74, right? So it's and that was just a couple months ago. Back on January, it was trading at $28, and you see how it literally just more than doubled. So you see the power of this. Like, we're trying to teach you guys how the big boys play in the market, and it's a lot. I mean, this is a lot. You need to know your shit. This is not a game that you just kind of throw tea leaves on some technicals and expect to make money. Yes, I use technicals. There's a way to use them. But, we got one person of our members liking. A shout out to Dish there. But you can see the value of using the sector rotation, and then sometimes there's a mess here. So you can clear them up and see, what's the next up and coming sector, which is nice. You can take a look at the last 30 days or 15 days, and you can see energy's been trailing, and these two have been leading. So this is healthcare. Oh, nice. Consumer staples, right? So you can look at all the healthcare stocks, right? So you can, let's say Clove, 2026. And it's growing at 82%, 81%. If you guys follow me, you would do that calculation, the 81%. And we, if they continue at this, it could be a, let's see, equity value per share. It's saying around $39 here, right? So $40. If we go in and do the non-leveraged and it works different for different companies. That's why it's important to do both. Oh, sorry, I didn't put Clove. So that's good. We're doing this so you can see how to use it. 2026. So you can see here the equity value per share is 178. The here was 39. So you can see the difference between how far this can go. Once it becomes free cash flow positive next year, we're going to be getting a better picture, right? So it gives you it's a very powerful tool, right? And I don't know what other companies. Let's do, since we did an oil stock, let's do another oil stock. Yeah, let's do Exxon, right? Why not? 2026. So we expect them to make this much in revenue by 2026. The equity value per share, essentially the price target, $75. Again, if we did this calculation in our long-term price target, and it's around that value. If you into search in our private Discord, all you got to do is type in, pick the channel, which is called long-term price targets, type in XOM, search for it, and then these are the two messages that I did. So the first, let's do the first one. The first one, I congratulated everyone, saying, "Hey, it hit our price target of $80. Congratulations on your 32% gain." But if you go to the original post, I had ExxonMobil anywhere between 50 to 92, which is right around that $75 mark that our BrainMachine was able to populate, right? So this is it shows you the power under your fingertips. If you want to make money, this is a sophisticated way of doing it. And unfortunately, no one's offering this. And it's one of those kind of hush-hush things. I don't know. It's kind of human nature. But it's not like this is not going to work. This is all math. So long-term investing always pans out. There are obviously some risks if a company stops performing. What's a good example of a company that just kind of went belly flop? There's a couple of examples back in 2000. We were expected to do, there it is, a good one. A Chinese company. They were doing a private education, and they were making a killing, dude. They were like a $70, $80 stock value. But then the Chinese government came. This one happened in America, but the Chinese government came and they said, "Hey, private school companies can no longer make this much money. They can only make like 5 to 10%. Well, that just decreased their whole business model. So if there's a change in the fundamentals, then obviously there's a problem, right? So just to kind of give you a good example there. But I don't expect that to happen in the United States. Regulation is very tough to crack in. So yeah, you can go in and pretty much, I think you guys got the point. You can go in and take a look at this. Let's look up United Healthcare. Ended up with a healthcare here. So United UNH 2026. You can see United Healthcare is around $576, but it's currently trading at, where is it? 495. So that's a little undervalued, right? Not by much, but you know what I mean? And if you look up the stock here, UNH stock, you can see that, 553. So it's definitely went near that price target. So what you can do is you can always kind of, if you really want, you could take a 20% margin of safety off of that value. And that could be your sell point if you really want. So to take 20%, which is 115. That's a little too much, but you can sell at 461 on whatever that stock is going to be. So you could be a little bit even more conservative, which is, pretty damn conservative, right? I believe the discount rate is around 6.6 because, it's a long established company. So let's say, for example, you want to use our, intrinsic value calculation, which you can find lifetime access in our mastering course, and everything that we offer. It's all lifetime, even the BrainMachine for beta access members. So definitely take advantage. We have been featured on Bloomberg, MarketWatch, NASDAQ, Benzinga, Yahoo Finance. So keep that in mind. Our product is definitely supported. If you hear some squeaky noise, it's my puppy. So definitely we talked yesterday about how to get free cash flow information. You can definitely get the information by logging on to our website and going to the technicals and fundamental data analysis, or by just going to the free cash flow finder, which is, again, there's like three big statements. There's this income statement, balance sheet, and also the free cash flow, right? Or cash flow statement, right? And then also there's key financial ratios, return on equity, all these different types of things that we'll talk about when we teach it to you guys here. But let's say, you want to do it this way. There's multiple ways to skin a cat. Whoever's taken biology, there's something called a genetic code, and there's redundancy within the genetic code, meaning that if there's a mutation, it doesn't matter. You will still get that DNA base pair synthesizing a protein because there's redundancy, meaning that if one way fails, you have other ways to get out to the information. Okay. My two dogs are fighting. But essentially, meaning that, let's say, for example, if one website's down or my web, you would still be able to move on forward with your life, right? So, so if you go down to stock fundamentals, you have access to net income, cash flow, and balance sheet, and all the other stuff here. And there's so much stuff. Sentiment. We also give a stock score. If you go down here to fundamentals, we do different types of metrics, which you'll be able to get a a stock score based off of, I believe it's under ratios here. So if you type in, let's say, MSFT, it'll give you the current ratio. These are obviously the ratios that you would get for the key ratios. There's a specific section in here. We put it in a different section, but essentially what it does is it gives you scores on how to evaluate a company, and there's these scoring systems that tell you, is this a risky company? Is this a good company? What is the risk of bankruptcy for this company? So there's a lot of hidden features in here that we will be doing tutorials on, but definitely will show you guys. But sticking to the plan, if we go to Al Help and look up the stock fundamentals here, you can see that if we want to go to the free cash flow, we can go there, and then we can type in AAPL. Oh my God, she's so annoying with that. Then you would go in and do 2026. Or not, I'm sorry, we want to do, let's say, you can do past 20, 30 years. Let's do the past 5 years. So once you do that and you look at the cash flow statements, what it'll do is it'll give you the past 5 years, right? So already it populated. So you can go back up. In fact, we'll just do it here. So this 2017 information, you'll get the net income. You'll get the free cash flow, which is 50 billion, right? You go up here, free cash flow is 64 billion. Go up here, 58 billion, 73 billion, 92 billion, right? So you can see, and you can take that and drop it into your intrinsic value calculation to do the ultimate master price target. This is the intrinsic value calculation is the creme de la creme. It is the one that I believe is definitely, once you scan through the list of these companies and do your BrainMachine, whatever sticks out as a white flag, red flag, you can go in and more specifically and do these different types of calculations. So I hope that this was helpful. Definitely, I'm very excited to share this knowledge with you guys and share access to this proprietary information. And if you guys do see fit, and if you guys want access, we do offer the BrainMachine for under $12 a month, and literally as low as $10 for the yearly access. Just FYI, we are going to be throttling down the advanced DCF, mastering students that have lifetime access, and we'll be essentially getting these types of plans when it's essentially going to be unlimited. There's going to be another tier called Al Stock Alerts Plus, and that'll be unlimited, everything we offer on the Discord. But we're going to be throttling this down because this is definitely takes a lot of bandwidth and a lot of there's different types of queries and APIs that function differently, and this definitely takes a hit. So definitely we're going to be doing a different tier for people, but we're going to be throttling down. We want everyone to have access to this. So even Al Stock Alerts members, basic, are going to be getting the this particular command. But it's going to be throttled down. But as of right now, it's currently not. So I would, current members take advantage of it, right? But for the free cash flow, let's say if you want to go to 2019, since we're here, it gives you the exact the SEC filing, so you can go in and click on the link here. For some reason, it's not loading that right now. But what we'll do is it'll there it is. So it'll show you this. You can click on it right there too, but it'll show you the annual 10K report. One just goes in, the other just shows you other reports you can look at. But you can kind of do your own due diligence and essentially see what the company is up to. Warren Buffett technically looks at the annual report. Obviously, you don't want to read the whole thing. There's a lot of redundancy, but it takes approximately 45 to 55 minutes for an experienced investor to go through this to look at the holes. On average, when I first started a long time ago, I would say it took me around 6 hours, maybe a day or two to go through it, maybe sometimes a week. But, baby steps. God bless you guys, and I hope this video was of value. Please don't forget to smash that like button. Don't forget to subscribe and turn on all notifications, and comment down below what companies you want to see analyzed. Pleasure. I'll see you on the next one.